Welcome back to the channel. I'm Algabot, and today we're taking an educational look at an expert advisor for MetaTrader 5 called the Expansion Candle Equilibrium Retest. This is a trend continuation approach built around a simple idea. When one candle expands far beyond recent volatility and closes hard in its own direction, it leaves a footprint of one-sided order flow. Instead of chasing that move, the strategy waits patiently for price to pull back to the candle's own 50% midpoint. Along the way, we'll see how it uses the average true range, a moving average, and the relative strength index together. Let's get started. Let's start with the big picture. The Expansion Candle Equilibrium Retest is a trend-following continuation strategy. Its whole philosophy is that chasing a big candle at its close is poor risk placement, while waiting for that same move to retrace to its own value area can offer a tighter, more structured entry. This expert advisor was designed with instruments like Euro, US dollar, Pound, US dollar, and gold in mind, but it is symbol and timeframe agnostic, so it simply runs on whatever chart and timeframe you attach it to during testing. Three indicators work together here. First, the average true range measures volatility, so the definition of a big candle adapts to the instrument and the current market conditions rather than relying on a fixed number of pips. A candle only counts as an expansion when its range is at least a set multiple of that average true range. Second, an exponential moving average defines the prevailing trend. The impulse candle must close on the trend side of that moving average, and the moving average itself must be sloping in the same direction. Third, the relative strength index acts as a momentum quality check. It has to sit in trend territory, yet not be so stretched that the move looks exhausted, which helps the approach join healthy trends while stepping aside during possible blow-off extremes. Once all of those conditions align, the strategy stores the candle's 50% equilibrium, remembers the impulse extreme as a stop reference, and opens a short window of bars for the retest to happen. If price dips back to that midpoint and then defends it with a close in the trend direction, the entry is considered valid. Who is this style suited for in an educational sense? It tends to appeal to traders who prefer patience over chasing, who like structural stop placement anchored to real price levels, and who are studying how volatility, trend, and momentum filters can be combined. Remember, this is educational information only. Trading carries risk, and losses are a normal part of any strategy. Now let's walk through the exact logic, step by step. Everything happens on completed candles. When a new bar opens, the strategy examines the candle that just closed. Step 1 is spotting the expansion. The strategy measures the range of the just closed candle from high to low and compares it to the average true range. The range must be at least the range ATR multiple, which defaults to 1.4 times the average true range. On top of that, the body must fill at least the body fraction of the range, defaulting to 55%, so the candle is decisive rather than a wide bar full of wicks. Step 2 adds the direction and quality filters. For a long setup, the candle must close bullish, with the close landing in the top portion of the range, defined by the close lock value of 65%. The close must be above the exponential moving average, and that average must be rising. The relative strength index must sit between its trend floor of 50 and its exhaustion ceiling of 78. For a short setup, every one of these conditions is mirrored. When all of that is satisfied, step 3 arms the setup. The strategy calculates the equilibrium as the high plus the low divided by 2, the exact 50% midpoint of the impulse candle. It records the impulse extreme, the low for longs or the high for shorts, as the stop anchor, and it opens a window of ArmBars, defaulting to 6 bars, for the retest to appear. Step 4 is the retest itself. Within that window, the strategy looks for a later bar that dips down to or through the equilibrium, yet closes back above it with a bullish body for a long. That defended midpoint is the entry signal. For a short, price must poke up to the equilibrium and then close back below it with a bearish body. Now the exits. The stop loss is placed just beyond the impulse or retest extreme, with an extra buffer of ATR buffer, defaulting to a quarter of the average true range. The take profit is set at the reward-risk multiple of that stop distance, defaulting to 1.8 times risk. Importantly, the setup is invalidated early if a bar closes beyond the impulse extreme, meaning the displacement failed, or if the window simply expires without a retest. Only one position runs per magic number at a time. Let's read through the code as it appears in MetaEditor. At the top are the input parameters you can adjust. RangeAtrMult sets how many average true ranges wide the candle must be. Body frac and close lock control how decisive the body and how strong the close must be. RSI trendmin and RSI max define the momentum band. ArmBars is the retest window, RewardRisk is the target multiple, and ATR buffer adds a little room beyond the stop. Now the long side. The Boolean called bull checks that the just closed candle is bullish, that its close sits in the leading fraction of the range, that the close is above a rising exponential moving average, and that the relative strength index is between 50 and 78. Once armed, the defended retest condition checks that the low dipped to the stored midpoint, that the close came back above it, and that the body is bullish. When that is true, the code computes the stop as the lower of the impulse and retest lows minus the buffer, sets the take profit at the reward to risk multiple of that distance, and calls trade.buy. The short side mirrors everything. The bear Boolean wants a bearish candle closing below a falling moving average with the relative strength index in the mirrored band. On the retest, price pokes up to the midpoint, closes back below it with a bearish body. The stop goes above the extreme plus the buffer, and trade.sell is called. Same structure, opposite direction. Let's walk through this chart candle by candle and watch both a long and a short unfold. On the price panel, you can see the blue exponential moving average acting as the trend filter, and below it the gold relative strength index with its trend zones marked. We begin on the left with a few small, quiet candles. Price is drifting gently higher, and the moving average is sloping upward beneath it, so the backdrop is a mild uptrend. The relative strength index is hovering just above its midline of 50, sitting inside the long trend zone but not stretched. Then the fourth candle changes everything. It's tall, it opens near its low and closes near its high, and its range clearly dwarfs the recent candles. That is the expansion, or impulse, candle the strategy is hunting for. Its range easily clears the average true range multiple. Its body fills most of the range. Its close lands in the top portion. It finishes above the rising moving average, and the relative strength index sits comfortably in that healthy 60-something region below the exhaustion line. All conditions agree, so the strategy arms a long setup. It quietly records the 50% midpoint of that candle and starts counting down its retest window. Now notice what the strategy does not do. It does not chase the close of that big candle. Instead, over the next candle price cools off and begins to pull back toward the middle of the impulse. On the retest candle, price dips down to that stored equilibrium, tests it, and then closes back above it with a bullish body. That defended midpoint is the long signal, and the buy entry marker appears. The stop loss is tucked just below the impulse low, giving a tight structural risk, and the take profit is projected at 1.8 times that distance. From there, the trend resumes. The following candles push steadily higher, each closing above the last, until price reaches the take profit target and the long trade is complete. That is the whole thesis in action. Wait for the pullback to value, then ride the continuation. Now the market rolls over, and we look for the mirror image. After the highs are rejected, a tall bearish candle prints. It opens near its high and closes near its low. Its range again clears the volatility threshold, and the relative strength index has dropped down into the short trend zone below 50. The moving average has begun to flatten and turn lower as price loses altitude. That bearish expansion arms a short setup, and the strategy stores its 50% equilibrium. Price then bounces gently back up toward that midpoint. On the retest candle, price pokes up into the equilibrium, fails to hold, and closes back below it with a bearish body. That is the short signal, and the sell entry marker appears, with the stop placed just above the impulse high. Price then rolls over again, sliding lower candle after candle until it reaches the short take profit target. Both sequences show the same disciplined pattern. Identify a decisive move, wait for the retest of its midpoint, and join the trend with a defined stop and a defined target. So there we have it. Today we explored the Expansion Candle Equilibrium Retest Expert Advisor for MetaTrader 5. We saw how it identifies an expansion candle against the average true range, confirms direction with an exponential moving average, checks momentum quality with the relative strength index, and then waits patiently for a defended retest of the candle's 50% equilibrium before entering, always with a structural stop and a reward-to-risk target. Remember that everything here is educational information only and not financial advice, a recommendation, or a solicitation. Every strategy carries risk, and losing trades are a normal part of trading. If you found this analysis helpful, please like the video, subscribe for more MetaTrader 5 strategy breakdowns, and share your thoughts in the comments. You can learn more over at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.